Welcome to the OxySure 2Q13 earnings call. My name is Vanessa, and I will be your operator for today's call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session. Please note that this conference is being recorded, and I will now turn the call over to Julian Ross. You may begin.
Thank you, and good morning, everyone. This is Andrew Borowicki, Investor Relations for OxySure Systems. Joining us today for OxySure Systems' second quarter 2013 earnings conference call is the company's Chairman and CEO, Mr. Julian Ross. Mr. Ross will review and comment on financial and operational results for the second quarter, and he will be available to answer questions after the presentation. I'd like to remind our listeners that on this call, prepared remarks may contain forward-looking statements which are subject to risks and uncertainties, and that management may make additional statements in response to your questions. Therefore, the company claims the protection from the safe harbor for forward-looking statements that is contained in the Private Securities Litigation Reform Act of 1995. Forward-looking statements related to the business of OxySure Systems and its subsidiaries can be identified by common use forward-looking terminology, and those statements involve unknown risks and uncertainties, including all business-related risks that are more detailed in the company's filings with the Securities and Exchange Commission on Form 10-K, 10-Q, and 8-Q. For those who are unable to listen to the entire call, we'll have an audio replay that will be available, and the call is also being webcast so you can log in via the Internet. And all that information was provided on the conference call announcement and the earnings release this morning. At this time, I'd like to turn the call over to Julian Ross, the CEO of the company, and he'll provide opening remarks. Julian, the floor is yours.
Thank you, Andrew. Good morning, everyone, and welcome. Before I begin, I'd like to point out that this presentation is already posted to the Investor Relations section of our website for your convenience. Now to the results. We are pleased to report that we have sustained our positive momentum from Q1 into Q2, and we are pleased to report that our financial results continue to show rapidly improving fundamentals. Our growth has been that of aggressive growth, and while we were managing our burn rate. Our growth in the second quarter represents yet another record as the benefits of prior and current research and development and marketing initiatives have begun to materialize. This is our second consecutive quarter of triple-digit revenue growth rate as compared to year earlier quarters. To give you an idea of the sequential quarterly growth, this slide shows our revenues and gross profits for the last 3 quarters sequentially. As regards revenue, we went from about $76,000 in Q4 12 to about $240,000 in Q1 13, a 216% jump. From there, we increased about $476,000 in Q2 13, a 98% increase. Gross profit went from $68,000 to $187,000 to $324,000 in the last 3 sequential quarters. We are very pleased with this trend. So, for the second quarter of 2013, some of the quarter-over-quarter highlights include the following. For the 3 months ended June 30, 2013, revenues increased to $476,071, representing an increase of approximately $413,180, or 657%, as compared to $62,891 for the 3 months ended June 30, 2012. The increase was driven by a $344,731, or over 1,900% increase in product sales in the U.S. and $112,500 in revenues from licensing and service agreements. Gross profit was $323,599 for the 3 months ended June 30, 2013, an increase of $285,864, or 758% from the $37,735 in the same period last year. This increase was primarily due to significantly higher product and service sales. With margin was 68%, up from 60%. SG&A was $511,980 compared to $256,754 for the 3 prior months in 2012. We increased our sales and marketing expense from about $18,000 to about $133,000 as we expanded our sales and marketing and branding efforts. We also recorded an increase in R&D expense, primarily attributable to an increase in research and development expense recognized in connection with products for military markets. These increases are partially offset by a decrease in other G&A expense, which fell 18% to about $195,000 as compared to approximately $237,000 for the prior period. The decrease in other G&A expense was primarily as a result of a decrease in depreciation and amortization expense, a decrease in employee stock option expense, and a decrease in professional fees. Interest expense fell 60% to $23,254 for the second quarter of 2013 from $57,462 during the second quarter of 2012. Finally, net loss decreased by about 12% to $192,609, or just 0.8 of 1 cent per share, as compared to $218,472, or 1 cent per share for the second quarter of 2012. Other financial items of note include working capital deficit improved by approximately $1.9 million. Stockholder deficit improved by approximately $2.4 million. The total number of derivative securities outstanding reduced by approximately 2 million, or 31%, and our weighted average shares outstanding during the quarter was just over 23 million. Our key business milestones achieved during the quarter include the following. First, we signed a distribution agreement with Dutch conglomerate Medijzen to distribute products in the Netherlands, Belgium, and Luxembourg. Second, we launched a new product, a double-wall cabinet to house a combination AED OxySure system. Third, we added new distributors in the U.S. to expand our distribution footprint. And fourth, our Model 615 emergency oxygen device continues to be used in saving people in various medical emergency situations. We've also added numerous education and commercial customers during the quarter, including key customer acquisitions such as the division of Mercedes-Benz and the new Cleveland Global Center for Health Innovation. The Cleveland Global Center for Health Innovation combines a new state-of-the-art convention facility and a one-of-a-kind marketplace for the medical industry that is expected to see over 4 million visitors every year. So as for the remainder of 2013, our focus will continue to be to grow revenue as aggressively as we can while managing our burn rate, pursue new regulatory approvals, add new distribution partners, build out our strategic accounts team, add new products, and achieve additional operational efficiencies. We are also forging into new areas related to oxygen technology. In this regard, we expect to continue to ship kits for the military under our teaming agreement. These portable oxygen kits are used by the military, special operations, and air mobility commands in high-pressure, high-altitude situations for airdrop, including personnel and supplies. In addition, we are working to expand our oxygen platform to offer solutions for the military combat battlefield. We hope to report further progress on this in the next couple of quarters. And that concludes the financial results portion of my prepared remarks. Please note I'm only covering the financial results portion of the presentation on the web link. The rest of the presentation is for those of you who are new to the company. And I would like to remind everyone that this presentation, the audio file of this call, and our 10Q filing will be available on the Investor Relations section of our website later on today. So at this time, I will hand the call back to the operator for Q&A. Operator?
And thank you. If you have a question, please press star, then 1 on your touch-tone phone. If you wish to be removed from the queue, please press the pound sign or the hash key. If you are using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, if you have a question, please press star, then 1 on your touch-tone phone. And I see we have our first question from Jason Nepando with Zacks Investment Research. Please go ahead.
Morning, everyone.
Morning.
Congratulations on a great quarter, Julian. Really solid revenue growth. Wondering if you could maybe just give us a little bit more color on the revenues, if maybe provide a breakdown of where the growth is coming from internationally or in the U.S., and maybe if you can just kind of touch on the product mix between the OxySure products developed in-house and some of the external AEDs that you guys began promoting earlier in the year.
Thanks, Jason, and thank you for the question. Our revenue mix is still evolving, but at this time, the contributions to the different line items are allowing us to create a smooth growth line on the top line. So that's the good news for us. As far as the contributions themselves, we have seen a boost from our military business in this past quarter. A significant amount of that came from the kits that we are shipping in connection with our teaming agreement. The revenues from third-party products such as AEDs and the like are still catching up. We treat those as secondary products as part of our solution. And of course, our primary product is always going to be the Model 225 for the moment. So while I'm not giving sort of specific numbers, I wanted to give you a sense of where the bulk of the contribution is coming from as this revenue mix is evolving.
In terms of the distribution, the teaming agreement with the military, was there any kind of one-time upfront orders that took place in the second quarter? And then kind of to build off that, where do you see sales with the military going in the future? And I know you're still working on the kind of the portable battlefield model, but I suppose if you could provide maybe some timelines on that and just some thoughts on how the military orders, because if I'm correct about this, they tend to place some large orders up front, and I'm just trying to get a sense of what we could see if that happens.
Certainly. So the answer is actually no to the question of upfront orders. We did work on developing this line of business for some period of time, quite a long time actually, and as it came to fruition, we saw some shipments in the first quarter, and then we saw some increase in those shipments in the second quarter, and we expect some of those shipments to continue in the third quarter and beyond. There is a 5-year contract in place between the military and the prime contractor, and we do believe we'll see some additional business from that particular segment. As far as the new project that we're working on, we think we'll see some evidence of this coming together in the next couple of quarters. We believe conservatively, by the fourth quarter, we'll start seeing business coming in from that. In our case, these things do take a while in the incubation period and putting it all together. But then there seems to be a steady program of ordering by the government once the program is up and running.
Well, like I said, great quarter, guys. Impressive revenue growth, and keep up the good work.
Thank you, David.
And our next question comes from David Elias with DME Securities. Please go ahead.
Hey, Julian, how are you? Congratulations on a great quarter. It seems that the first half of the year has shown significant growth, and the expenses, it seems you're managing them very well. What can we expect in the second half of the year? And will it be safe to assume, as part of the overall plan, expenses will go up to support further growth?
Thank you, David, and thank you for the question. As I mentioned before, our goal is to pursue aggressive growth while managing the burn rate. In simple terms, of course, you want to make sure you don't grow yourself out of business, and we're not going to do that. So as far as the second half of the year, we expect a continuation of the trends we've seen, and we expect to see a continuation of the improvement in the fundamentals. The markets have always liked our story, but of course, now it's up to us to build the fundamentals in the company. So we're pleased to see that happen, and we expect that to continue. So hopefully that answers your question, David.
Yes, it does. Thank you very much. And again, congratulations on a great quarter.
Thank you.
And we have no further questions. I will now turn the call back over to Julian Ross for closing remarks.
Thank you, and that concludes our 2Q13 earnings call. Thank you, everyone, for participating. We will talk again next time. Have a great week, and goodbye.
And thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.